Welcome to the daily update, where I'll go over the action in the market for Tuesday, September 19th, and then we'll see how things look for Wednesday, September 20th. We are turning more negative, technically. In the short term, there's a few of our indicators that are looking extreme negative. In the intermediate term, we're seeing some weakness, but in the long term, we're still hanging in there, at least for right now. We're in wait and see mode now when it comes to the Fed, and we're going to try to figure out it's not so much what they're going to do, it's what they're going to say at the press conference after they make their announcement on Wednesday. Let's go back and talk about what happened. Right at the open, we had a lower open with prices dropping below S1 at 44.42. Then we dropped below S2 at 44.30. We found support at 44.16 and then spent the afternoon climbing back above S2 and S1. So that's somewhat positive to see some late in the day buying. And we closed near the intraday high. Now, we were still down on the day, but if you look at the bar by itself, it looks a little more positive, but we need to see a lot more than what we're seeing with some kind of a rebound at this point. We were down 0.22% on below average volume, and our technicals are turning more negative. Longer term, we're still positive. It's not so much about inflation and interest rates, it's about the Fed in Wednesday's session. Some comments that we can make: oil was up earlier in the session, and that was putting some pressure on stocks. As oil started to come back down, stocks started to recover. There is some reports coming out of Canada that their inflation rate is going up. That's producing some concerns. Also, last week, the EU hinted at the fact that they might be done raising interest rates, but then there were some hawkish statements that came out that might be putting that in jeopardy. And then we're keeping an eye on Japan because they may be ending their negative interest rate policy. They own a lot of US bonds, and if they have to sell those bonds, that's going to push prices down and interest rates up. So we want to keep an eye on that. We are on Fed watch. And on a short-term basis, the Stochh RSI and the CCI 14 are extreme negative. And the scenario that we've been dealing with the last few weeks, or over the last few weeks, we're wondering, is that going to shift into something new? The only thing that seems to remain is that it's looking like the Fed will have to keep rates higher for longer. We're also keeping an eye on the Chinese economy and the rise in oil. The dollar was up and interest rates were up, and both of those put pressure on stocks. The yield curves that we follow are still inverted. Sentiment is neutral at 49, where it had been at 48. Our trend is that we're not trending right now. It's negative with the red line on top, so we would default to that. But both in the short and intermediate term, we're below the moving average, and the ADX is below 20. And I'm keeping our bias and momentum at mixed right now just because the market is in wait and see mode. The economic reports that came out, we had housing starts that came in at 1.283 million, and the building permits were up 6.9% month over month to 1.543 million. Here's the chart showing the 3-month average, where it had been declining, both with the housing starts. They are continuing to go down. That's the blue line. And we're showing a little bit of a recovery with the building permits, which both of these together tend to be leading indicators, but we're seeing a contradiction here. Here's the housing starts month over month, where it did decrease. There's still a 99% chance that the Fed will leave rates unchanged at the meeting on Wednesday. And we can see where we're at right now at 99% and how the market has become more convicted that that's what will happen. We're also keeping an eye on interest rates. We're at 4.37% now. When we get above that 4.02% level based on this research, that's when it starts putting pressure on stocks. Here's the intraday chart where we came down below S1, below S2. We did set up a bit of a base and then spent the afternoon bouncing back up. So that is somewhat positive. When we look at large cap growth versus value, they're pretty much on top of each other, even though they're on different scales, and they were both negative. Here's the S&P growth to value ratio, where we were slightly positive. And on an end of day basis, we ticked down just slightly. We've been going sideways, but we're still in a longer term uptrend. We're keeping an eye on the VIX, where on an average basis from 1990 up to 2022, the blue line has been going up, and that usually means stocks are going down. We'll have to see if it plays out that way this time. Then looking at the VIX, where we ticked up with the line chart and with the bar chart, but we're still below the moving averages on each, suggesting that there's not an awful lot of fear. And the VIX of the VIX also declined, showing that volatility is coming out of the VIX. This is somewhat positive. Our 5-period simple moving average of the equity put call ratio continues to decline after coming up to an extreme positive reading. Now, we could always turn and go back up, but for right now, it is showing some improvement. And here's a longer term look at that same chart where we're above the 0.8 level and starting to decline. We're also starting to turn back down when we look at the VIX to VVIX ratio. That could be positive for the market. But longer term, with the 253-period simple moving average, we're continuing to go higher. And it's going to take a while for this to roll over if that's what ends up happening. So this is still negative. Looking at the advanced decline line, we did decline based on price and a little bit more based on volume, but we're still above the moving average. We're still continuing to decline with the new highs, new lows with our 5-period and our 10-period. And we're dropping below the midpoint with the advanced decline ratio. Accumulation distribution did tick up a little bit, but we're still below a declining moving average. And the Chaikin money flow, another smart money indicator, it is continuing to be negative. We're starting to come down to this previous low with the cumulative NYSE advanced decline line. We'll have to see, is it going to hold at this level or continue to fall? On a more negative side, the regular NYSE advanced decline line is starting to drop below the trend line. We're also seeing continued short-term weakness with our risk-on versus risk-off ratio. And here's our trend showing how the ADX is below the moving average. The red line is on top. We're not trending, but we default to negative. And we're seeing pretty much that same thing with the short-term chart. Here's the daily chart. We continue to be below the 50-day moving average, below this pivot point, and we're just not showing a lot of strength right now. And then on the bottom, it shows where we drop to below average again. The Stoch RSI is extreme negative, and we're turning down in the short term with our stochastics, also looking more negative in the intermediate short term, rolling over but still positive in the long short term stochastic study. The force index continues to be negative. The go, no-go system is also negative. We're dropping below the midpoint with the highest high, lowest low values. We're seeing the red line coming up. That could be positive, but the blue line is continuing to go sideways. We're keeping more of an eye on the midpoint right now. The TTM squeeze is still positive, but showing some weakness. The balance of power dropping below the dashed line, looking more negative. The CCI 14 is starting to get extreme negative. And this is another new addition where the ease of movement based on 14 periods is finally dropped below 0. That's turning negative. The vortex is also crossed over negative where the green line's below, the red line's on top. That has also switched negative. The balance of power, the bullish percent index is also dropping below 50. That's turning more negative. We're below 0 and declining with the S&P McClellan oscillator. So based on price, the summation index is declining and we're rolling over based on volume. We had been seeing some hope with volume, but that is now fading away. Our broader measure, the NYSE McClellan oscillator, also below 0 and declining. So the summation index based on price and volume continue to decline. We're still negative with the Elder Impulse system for the S&P. We're still wondering also if this mass index signal is going to turn into anything. We're kind of leaving it behind in the rearview mirror, but we'll just have to see if some kind of a reversal happens, but we're not quite sure a reversal from what. So this is becoming less relevant as each day goes by. We're still pretty much sideways to slightly declining with the PMO. We're rolling over based on price. We're also still positive based on volume, but rolling over. The PMO study showing a decline with the PMOs that are rising, starting to roll over a little bit with the buy signals, as well as rolling over with the percent of PMOs that are above 0. We're dropping below 0 with the Swenlin trading oscillator based on price and volume. That's more negative. And we're below 0 and declining with the NYSE bullish percent index. The NASDAQ 100 bullish percent index is also below 50 and declining. We're still inside the Ichimoku cloud since nothing has really been decided yet. And our oscillators are turning more negative. We've now turned negative with the slope, We're turning down with the TSI, rolling over with the MACD, the PMO, PPO, starting to roll over more with our longer-term oscillators, the TRIX and the KST. We're dropping below these moving averages in our moving average tree, but you can see the bar where we opened, came down to the low, and then closed pretty much back at the high. That could be positive, but shouldn't be taken as too positive until we see follow through based on price. Bollinger Bands, we're dropping. We came down below the midpoint, but then we're just a little bit below it after Tuesday's session. We're also dropping a little bit below the midpoint with our standard deviations chart. We're dropping to the lower moving average with our open, high, low, close study. But again, this bar looks okay, but we want to know, can we see some strength built on that? We're still negative with the parabolic SAR. We're still negative with the weekly chart of the MACD. We're turning more negative with the Heiken Ashi, turning negative now with the Kegi. There's a red line here pointing down. The Renko is still looking positive. The 3-line break is still looking positive. So we're seeing a real mixed picture. The equal weight index continues to underperform the S&P 500. And we're not really showing anything decisive as far as the Dow. We're still below this pivot point. We're still below the 50-day moving average. And we're still negative with the Elder's Impulse system for the diamonds. We're also still below this previous high, the red line that I have here for the NASDAQ 100. And the Qs continue to be negative. The momentum study that we look at for the NASDAQ 100 is looking more negative. And we're also dropping below the pivot point and the 50-day moving average, going a little bit further with the NASDAQ. And we're below the 50-day moving average with the FANG index. The small caps, they're below their 200-day moving average, and we closed down just a little bit below the support level. Where we're seeing something a little more negative is with the Russell 2000 small caps. We're declining with the RSI and below 50. We closed below the 200-day moving average. We came down to this level 3 times, and now we're starting to close down below that. That could be negative. We're also seeing where the MACD continues to be negative. And the Elder Impulse system for the small caps is also remaining at negative. The mid caps are coming down to their 200-day moving average. So far, that support has held, and we're just a little bit above this support level. However, the Elder Impulse system for the mid caps remains negative. And we're seeing a decline with the Dow. We're seeing a little bit more decline with the transports. That's negative. And we're also declining now with the utilities. And the transports to S&P 500 ratio did decline. That's more negative. We did see interest rates going up. We're coming back to this previous high now. We actually closed above that level, but on an intraday basis, we topped out. We'll have to see. Are interest rates going to keep going up? Looking at Tom Bowley's research, we're coming into the part of the month now where we're more negative. That's the middle to latter part of September. So what's our outlook for Wednesday? Still dealing with some earnings reports that are being released. The United Auto Workers are still on strike. There's still this talk about, will there be a government shutdown, which as of right now looks like a political ploy. And student loan repayments will be restarting soon, which may have an impact on money coming into the stock market and going into the economy. Our technicals are still mixed right now, but leaning more negative, and we're not trending. And we'll get the weekly MBA mortgage applications index, and then the FOMC announcement will be made at 2 p.m. Eastern. Their press conference will come at about 2:30 p.m. Eastern, and the market's going to be looking for any secret meanings inside of every word that Chairperson Powell says. And keeping an eye on the geopolitical events, barring some strange event, it's all about the Fed in Wednesday's session. Here's the updated calendar where we will have the LEI coming out on Thursday. The Stock Traders Almanac statistics. We're neutral to positive with the Dow, but we're neutral to negative with the S&P and NASDAQ. We're also still in the middle of the week after options expiration, which tends to be negative. We will be on the 13th trading day of the month, where we do tend to see some weakness. And looking at the Carson research, they also suggest that we will see some weakness. This is the average from 1950 up to 2022, not separating pre-election years. And then we're also coming into the latter part of September, where we often see weakness in the NASDAQ. We also see weakness in the S&P. And historically, September tends to be quite negative. It's only up 33.3% of the time. So our scenario is not going with the down or up scenario right now because we're not trending. If anything, we lean towards the sideways trend, and we would default to negative because the red lines are on top. The warning signs, we're still below those long-term trend signals. That's the weekly chart of the S&P and the NASDAQ 100. We have not been able to break above those. We're in a seasonally and historically weak month as well as a weak period. The long-term 253 period equity put call ratio is turning up still, and the risk-on posture is showing weakness. Our S&P 500 McClellan oscillators are turning negative. The NASDAQ 100 oscillator that we follow is also turning negative. The cumulative new highs, new lows for the NASDAQ remain at showing weakness. We're still above the 3-month yield where we were back in 2007, wondering if that's going to roll over at some point. The parabolic SAR chart is negative. The Copic curve buy signal has ended. The vortex indicator has crossed over negative. And then we're dealing with earnings season. On the positive side, we still have seasonality and setups that remain in the background that I mainly covered in the weekly video. The daily special K chart is positive. The weekly chart is negative. We're still above the downtrend channel upper line. The equity put call ratio is continuing to go down. That's positive. The S&P is outperforming utilities, but the last couple of days, we're seeing that shifting a bit, as well as with the staples S&P 500 ratio. The Russell and the small caps and the mid caps do have golden crosses in their recent past, but it doesn't seem to be helping all that much. The Russell has closed down below its 200-day simple moving average. Small and mid-cap growth still continues to be positive, and this Russell closing below, that should be on the negative list. The financial sector has generated a recent golden cross. So our conclusion, we're turning negative and we're not trending. And we can say that in the short and intermediate term, we're still positive in the long term. So thank you. Have a really good day. I'll be watching the Fed just like everybody else, and we'll see how things play out. So have a good day, and I will talk to you in the next video.